Hey guys, it's Cam from Investors Underground. Welcome to Intermediate Series Lesson 3 of 8. At the time of recording this, the world has been flipped on its head by the coronavirus outbreak. There's a lot of volatility in the market, and there are a lot of catalyst-driven trades at the moment. So for this lesson, we're focusing on sectors and themes, and while we're using this specific moment of time as an example, the lessons that you're going to learn from it are applicable at any time in the market because there's always a kind of hot trend or theme or a sector that has a catalyst that creates opportunities or volatility in those stocks. Alrighty, runtime for today is going to be approximately 1 hour, and we're going to be going at a fairly hard-hitting pace because we want to cover as much information as we can in that time. But let's just jump right into it. What a crazy year it has been so far. You know, it made me think of a quote that I think I read in high school when we were studying the Soviet Union. And I'm a capitalist to the very bone, so I hate to be quoting Lenin, but he said that there are some decades where nothing happens at all. But there are some weeks where whole decades happen. And it really feels like it's been that way for the last couple of months. You know, not only from the trading perspective, but the IU community growing, but then also from, you know, the news cycle and keeping up to date with stuff and the implications it has on your life and what you're doing. You know, it's just been a totally new learning experience for all of us, I think. But through all this, I guess it's really helped to have the constant, which is being able to come to your trading station at the beginning of every day, sit down and be able to be productive during a period where the rest of the world seems like it's in turmoil. It kind of feels like us day traders have been training for this shift to work from home our whole careers, you know, our whole lives. So on to the next slide, and kind of one of the umbrella topics of tonight. Trading is hot right now, but will it be hot for you? And it seems that it isn't just me who had the idea that trading stocks from home during this quarantine period is a great way to be productive. And while it's natural for all of us day traders who have been doing this for years or decades, there are a lot of new players who are coming into the market. So basically this next slide shows trade activity in retail brokerage accounts. And we've got from 2004 all the way up to, 2016. The trend is upwards because there's more activity and trading has become more popular over this time. Access to the markets has become easier for people. But you'll notice in like 2017, 2018, you get a big uptick. And 2019, 2020, we're starting to go parabolic. So what is it that is causing all this? Well, it's not just the coronavirus and people staying at home, but that has certainly lit a match under the trend. Everybody wants to trade. And I originally thought it was just in my head because, I'm surrounded by traders and I'm living and breathing at every hour of every day. I thought it was like confirmation bias that everyone wanted to be trading stocks all the time. But then, you see personalities from different walks of life come in and start trading stocks. Semi-celebrities and well-known people. I'm not sure if it's going to work out for them, but it's entertaining to say the least. But it got me thinking, there's a few different forces that are working at the moment. We're still pretty much in the longest bull market in history. I mean, I'm not sure if we technically broke that in that last dip, but the last 10 years of stock market activity has meant some huge gains for people participating in the market. The second pointer I've got here is the rise of cryptocurrency trading, I think really ended up bringing a lot of people to the stock market. When there was a lot of volatility and liquidity in the crypto world, The traders were trading there, but as that kind of dried up, during 2018, 2019, I think a lot of traders who loved the action, the momentum, the volatility, and learned about reading charts and support and resistance and breakouts and breakdowns, transferred some of that knowledge and started learning and trading stocks. Mid to late 2019, we also saw all of the big box brokerages pretty much go commission-free on their trades. And I'm not going to spend too much time going into whether or not this is a big win or not for the consumer. Depending on fills and executions and all that kind of stuff, I could probably take up a whole nother webinar with that. But what it definitely did do was bring a lot of people to the market and really increase the frequency in which they traded. The next pointer I've got here is the market volatility. With this style of momentum trading, we thrive as traders in a market that has big range and big volume. So when people see that range and volume, they realize that there are lots of opportunities to be able to get on either sides of those trades and capitalize on the move. So not only are you getting huge moves because of the news cycle and the different catalysts in different industries or sectors at the moment, but you've also got everybody staying at home, kind of bored and wanting to dabble into the market and put some of their theories to test. And the last pointer I got here, I guess, kind of ties into that. People love to speculate. Everybody has a theory as to which way we're going on this, whether it's about the airlines or the cruise ships or the pharmaceutical stocks based on the clinical trials and the vaccinations and treatments and all that kind of stuff, or even try and speculate on the oil market or, more difficultly, the oil futures market. So is it even possible for everyone to be successful at this? Well, I spent a bit of time on Google Trends as I was researching for this intermediate lesson, because a big part of what's going on in the market activity right now, especially in the world of momentum trading, is because there are a lot of new market participants flooding in. Let's have a little bit of a look at what they're searching for. So the first obvious query that I plugged in and searched was the term trading stocks. And we got this chart here in blue. You can see it's been jamming the last couple of months. But then I got to thinking, well, what else would people be searching if they're coming to the market as new participants? So the second chart I've got here compares the term trading stocks, which is blue, to best stocks, which is red. And you can see that the term best stocks totally crushes trading stocks, right? And best stocks is a little concerning because it means that people are searching for stock picks. So then I thought, okay, cool. With all of these people searching for stocks, there are obviously going to be prudent people who are also looking how to best educate themselves as to embark on the journey of trading. So I had a little look at the phrase learn to trade, and there's been a little bit of an uptick. But then when we superimpose it next to best stocks, or I guess hot picks, you can see that everyone wants the stock picks and nobody cares to learn. In fact, you can barely even see the blue line. It's that line that's hugging the very bottom of the chart down there that is completely dwarfed by the red. So I understand that I'm kind of preaching to the choir here at the moment. You guys obviously fall into a category of people who are interested in learning how to trade, which is the whole reason we're sitting together now doing this webinar. But I wanted to kind of address this because so often I hear phrases like 90% of traders fail, or trading's just gambling, or the market is rigged, and things to this nature. So the next couple of slides, I kind of wanted to drill down on why I think those phrases are so common and have a little bit of a look at where people might be running into a bit of trouble. So on this first slide here, I wanted to kind of give you an idea of who these quote-unquote traders might be. And it's not in my nature to berate anyone for being a beginner, but I wanted to highlight this to kind of maybe give you an idea of who might be affecting these stats, or maybe the people who come to trading with a bad taste in their mouth saying the market's rigged against them or trading's just gambling, and really don't understand where they're going wrong in the whole thing. So I received an email from this gentleman. He's obviously an aspiring trader. He's not an Investors Underground member or anything like that. This is the first email I got from him. But it was with this picture attached, and it is a prediction for the month of May. And I got this a few days ago, so it was before the month had started. But I had a look at it, and it's got this kind of bullish 72%, bullish 60%, bearish 72%, some kind of probability attached to whether or not the market was going to be up or down on a given day. So I kind of scratched my head and thought to myself, well, how did this person come up with it? And I emailed that as my reply. To which they replied, "One, my friend, yes algorithm, let's see if this prediction works." And when you think about whether or not this person is going to be successful in the great trading experiment, whether they're going to accomplish everything they set out to achieve, whether they're going to make it in this endeavor. Looking at this strategy of guessing whether a particular day is going to be up or down, this has no connection to any kind of logic or strategy that exists that I've seen. And I think a lot of these people who don't have any kind of idea what they're doing, don't have any strategy, aren't using any rules, aren't disciplined, aren't taking the time to learn this craft, are the people who are making up a big chunk of the 90% of traders who fail. And then I think also in turn, they become the naysayers. They become the people who say trading is just gambling. Well, if you're just going to guess whether a day is going to be bullish or bearish, then it is gambling. If you don't have a plan, then it is gambling. It's the people who didn't bother to learn, who end up then projecting their bad experience and want to try and alleviate some of the burden of fault or responsibility for their failure on something else. So where am I getting to with all this? Well, I think there are two objective truths. Trading is possible, but trading is also not easy. And although the market is crazy right now and the patterns seem to be working better than they've ever worked before, and a lot of the traders who've been in the game are really making career-style moves in terms of the growth of their trading account and really their ability to excel in this game, there are still recipes for success and failure. So you need to build a foundation. You need to learn, you need to study, you need to test. You need to understand what your strengths and weaknesses are, and you need to focus on your strengths, eliminate situations which might exploit your weaknesses, and then repeat. You need to take responsibility for your mistakes, hold yourself accountable, and you need to be of the mindset that you can succeed in this game. Trading is possible. You need to plan your trades from start to finish, and we're going to go over that on some of the next slides. But you can see that this is kind of the opposite to, let's say, going in blind or not holding yourself accountable or blaming it on the market or a Trump tweet or something that Elon Musk said or the evil shorters or whatever it is. And one of the biggest problems you see with people who fail is, people who enter trades and just hope for the best. So you need to set yourself up right for what you're looking to achieve. And sometimes that might mean unlearning some of the stuff that might be good information, but might have nothing to do with what you're looking to try and execute. So one of the things with trading is that it goes against a lot of the stuff that you may have already learned in high school or listening to investment advisors or on CNBC. You can't just buy and hold. Stocks don't always just go up. You don't look for quote unquote value plays. And it's not very useful to listen to the CNBC figureheads or even an investment legend like Warren Buffett. He's got a different time frame and a different strategy to what we're looking to do here. And obviously, once you learn this stuff, you're going to have to think for yourself. But it's important to trade setups, not companies, and plan your trades from start to finish. On the next couple of slides, we're going to look at this, and then I'm going to hand over to Nate to chat a bit about trading examples and stuff that's been working really well in this market right now. So when I look at the most successful traders in this game, when I look at the guys who are the most consistent and also making the most money, every trade starts with a thesis. You set your game plan and time frame, and then you basically wait. You let the trades come to you, and then once they do, you have to execute on your plan. So everyone hears the word plan all the time. What does it look like? So although this is a little bit simplified, you can see the graphic on the right. You start with some kind of trade idea. Now, for everybody, this is going to be different because everybody's strategy is a little different. Everybody likes to trade in a different way. But you start with that trade idea and you ask yourself, what is confirmation that this trade looks like it's about to occur? What is confirmation? What is the trigger? Then you ask yourself, what's the rationale behind that? Why is this trigger important and why do I think it's going to be the catalyst as to the move? Then you have to look at your risk, what your stop loss should be and how you should size your position accordingly. And where's your profit target? How are you going to make sure you're getting paid out at a positive rate on your risk to ensure the reward is in check? And then you execute upon everything above. What's your entry price? What's your exit price? And if you're right, it leads to a profit. And if it doesn't work out, it leads to a loss. This seems kind of elementary, but you'd be surprised how many newer traders and some intermediate or even experienced traders click buttons first and then ask questions like this later. So the pointers I have along this, I think big picture. Don't be too zoomed in on every single tick. Be patient with entering the trade and be patient with the move. And remember the thesis. Remember the whole reason that you're in the trade. Is it proving to be true or is it proving to not be? And try not to stray too much from the plan. Well, I've been talking for around 15 minutes straight now, so I'm going to hand the mic over to Nate and get some of his thoughts on what's going on with traders right now and what's going on with the market right now. Nate?
Thanks a lot, Cam. I want to go over a few things before we get into some chart examples of just kind of understanding the basics and understanding where these ideas come from. And, one of the biggest things that I think that traders make a mistake on is they're already thinking about their exit right before they get in. They're almost out before they're in. They think so micro that they're missing the big picture. And if you just take one step back and start to think of a big picture kind of possibility with your trades, I think that it's going to open up a lot more opportunities, a lot more profits, a lot more just time for you to focus on what matters versus always going for that micro scalp and driving yourself insane. So in my opinion, it's good to have an understanding of why particular stocks are working, whether that be a particular sector that's hot, whether it be a particular theme that's hot. So sectors can be something such as airlines or cruise lines or oil names, necessity COVID-19 type plays. So you might have work from home type things, Zoom, Logitech, things that are starting to break out in the market while everybody's at home, such as telemedicine. We had TDOC making major highs, among many others, right? And then, you've got your airline sectors as well as your cruise lines, which are kind of in the same boat at this point. And then you've got your COVID-19 plays, right? So anytime that there's news related to the virus, whether it's good or bad, whether it's new testing kits needed, mask plays, things like that, there's a whole bunch of names within that sector. And when a particular theme starts to run, such as mask, if the government orders 10 million masks, well, then it's good to understand and know what names could potentially benefit from that. And that's really what's important right now. Because if one starts to go, if you understand and know the theme and know what's a potential trade in that sector, you can start to look for the laggers that haven't moved yet. So for example, if there's a big mask order, people might start to buy up APT. And then they might start to buy up AHPI. And if NBY hasn't moved yet, they're probably going to move to that one next. And then LAKE. And so there's a handful of names for pretty much every single sector or theme right now. But it's really just understanding what it is that's currently going on. And sectors can be, just like I said, cruise lines, airlines, necessity type products, COVID-19 type names. But then you've also got these themes which are kind of within the sector, but also themes could be right now 20 cent to 50 cent names are really, really hot, right? So how many times in the past week or two or three have you seen stocks go from 20 to 30 to 50 cents or 50, 60, 70 cents to $1.50 or $2? So it's really understanding what people want right now, what people are interested in right now. And while you might not normally pay attention to a 20-cent stock or a 30-cent stock, right now you should. Right now you definitely should. And so it's understanding when particular themes are hot and when they're not. And the faster that you can understand that, the faster that you can apply these types of ideas to your trading, I think the easier it's going to get. And one of the biggest issues that I see traders coming in and doing is they're already thinking about their exit as soon as they enter, right? They're in, but they're literally afraid to be in the name. They're afraid to be in the stock that they just bought or shorted. And they're literally getting out on the next tick, right? So that's a problem. And, you know, I think if you just take one big step back and look at the macro view, you need to look at, for me, I look at the 1 minute chart. But if you look at the 1 minute plus whatever you like, 15 minute, 5 minute, any of that doesn't matter, whatever you're comfortable with, but also the daily chart. And for me, the daily chart gives me the confidence to let a particular trade work for me, right? So normally I like to look left. If you go through the YouTube videos that we have, we talk about looking left all the time. And so I'll go through some examples of that. But when you look left, there's two reasons for that. One is, if you're looking to get short, it's a great spot to say, okay, I don't want to get too aggressive before it potentially tests those prior highs where it peaked out last time. So that's one way where you take that macro point of view to protect yourself from getting bent too early if you're looking to short a stock, because so many times people just short stuff because it's up. They see that it's up 10%, 20%, 50%, 100%. They think, hey, you know what? It's up too much. It's got to come down. They don't. Newsflash, they don't. But that's the first reason. And then the second reason is to understand and potentially anticipate where it's going to meet resistance, and at which point it may be a good potential spot to go ahead and start into a position on, for example, the short side. Now, you could do this on the long side as well when you're trying to find a bounce spot. But in this market, I've been finding less tops and less bottoms and letting other people find them for me. And so basically what that means is we just did a YouTube video a short while ago on pre-exhaustion. And a lot of times when stocks are going straight up, people are trying to find the top. Okay, try and short again. Okay, nope, didn't work out, covered. Try and short again. Okay, didn't work out, covered. And a lot of times I say I'd rather be 20 cents or 50 cents late than 2 or 3 too early, right? So what's working really, really well right now is just letting people pre-exhaust. Let them do the work for you. You don't need to be a hero. You don't need to try to find the top. Instead, let that trade parabolic. Let that trade, really just bend everybody over that's trying to find the top. Let them get bent up. And then you look to pick up the pieces. Because once that tide turns, the sellers are going to be there. The inventory is going to be on the offer. And people are going to be looking to get out. But on the way up, anything is possible. As you guys know, when you are wrong and you continue to be wrong and you keep on trying to find tops or bottoms on things, you get exhausted. And by the time that you say, you know what, screw it, I'm done, it finally does what you were expecting, right? And that's what I refer to as pre-exhaustion. So the goal is to avoid that. And it's very simple to avoid a lot of it. Obviously, sometimes you're going to walk into situations and you're going to be early. Of course. But the idea here is, how do you prevent it on a daily basis, right? How do you stop stepping in front of moves? How do you stop getting chopped, right? We talk about choppy markets, getting in and out, in and out, in and out, thinking that you're about to get paid and then all of a sudden it bounces, things like that, right? That is done by looking left, just like we talked about. There's multiple ways, multiple reasons to look left. We just talked about looking left on the daily chart, but in this case, you can look left on the intraday chart, whatever time frame you're using. For me, I use the 1 minute, like I've said, but 5, 15, whatever it is you feel comfortable with, and you look left. You look at where the support is holding. Where has it come back and tested a bunch of times? And if you are taking a contrary position, meaning if you're looking to get short before that level breaks, you just need to understand that you're on the front side of the move. One of the cheats to knowing quickly whether or not you're on the front side or the back side is VWAP. I suggest putting VWAP on your charts. If you are at Dash Trader, which is the platform that I use and recommend, it's a great feature, and it is one of the fastest ways to know, what side of the trade you're on. And anytime that I'm shorting on the front side of the move, I make sure that I'm locking into any pullbacks, because it's very easy to get comfortable on the wrong side of a trade, kind of add to your position, and regret it later. So a quick way of doing that is looking left to key areas where there's either support or resistance. And on the short side, obviously, it would be if you're above that support, you don't want to be aggressive. And then the other way is just looking at VWAP to find out whether you're on the front side or the back side of the move. Typically, I am more in a trader mindset, not necessarily scalping like crazy, but more actively managing a position if I am over VWAP, whereas I am more patient if it is under VWAP, because if that's the case, I'm on the side where most people are on the wrong side, right? If I'm short and we're under VWAP, that means that the average price that people bought at is higher than where it's currently at. And therefore, there's going to be more inventory above me than otherwise when it's typically over VWAP. So that's a great way and a great tool to use, and that's something that I would highly suggest adding to all of your charts. Now, like Cam said earlier, we are in a very, very unique time. And that's not just saying it to say it and, hey, this is a fantastic time to start trading. This is a fantastic time to be involved. Buy. That's not what we're saying. This is a legitimate, unique time in the history of trading because, for one, brokerage accounts are opening up record number of accounts. Over the last quarter, Schwab and E-Trade opened, I think E-Trade was about 300,000 accounts, and Schwab was about 600,000. Now, Schwab represents about 10% of the industry. So even if we lowballed it, that means that there was probably 5 million, 4 to 5, maybe 6 million accounts opened in the first quarter, which is insane. And based on the trends that Cam went over earlier, it's very similar if you go back and look at Bitcoin, right? You look at Bitcoin when everybody was talking about it and you couldn't go to Thanksgiving or you couldn't go to Christmas or any holidays without your cousin or your uncle or your friend's mom asking about, hey, do you think Bitcoin? What do you think about Ripple? What do you think about Litecoin, right? It's a very similar situation on Google Trends as that period of time during Bitcoin. And so because of that, there is a lot of speculation going on right now. Everybody wants to become rich. Everybody wants to know the secret sauce. Everybody wants to be told what to buy and sell. And when that happens, that creates opportunity if you know what you're doing. You have to be aware that everybody is waiting to be told what to do, right? So one of the greatest strategies right now is understanding what manufactured volume, manufactured breakouts are being created in the market. And what that means is basically what newsletters are influencing stocks. And one of the strategies that I like to do and look at and review and pay attention to is some of the biggest newsletters that actually alert entries and exits. Giving the people what they want, right? They want to just be told what to buy and sell, and they will do so at a beck and call. And when that happens, you have this false market impulsiveness that happens, and you get what I call a free look. You get a free look at what's going on. And when that happens, it creates opportunity. So one of the first examples that I have is this APDN type trade. Now, APDN was a trade that was basically going straight up pre-market. And again, I'm not trying to find the top. Like I've said before, I'd rather be 20 to 50 cents late, even $1 late, than $2, $3, $4, $5 too early, right? Let everybody else find the top. This is the pre-exhaustion thing I was talking about. Let other people get in there, get squeezed out, and make bad decisions. Make sure you don't make the bad decisions. Let them get exhausted, and then that's when you start to come in. And so I let APDN pull back, and then right off the open, and you can see all the volume associated with it right at the open, but right off the open, a newsletter alerts along, and they start to buy, and they try to send it into what's called a circuit halt. When the stock moves 10% within a period of 5 minutes. A lot of times you'll see this right off the open around 9:40, 9:45, and sends it into a circuit halt. The stock halts for 5 minutes, and then many times opens up a little bit higher or potentially fails and comes back. But I call it a free look because you have 1,000, 2,000, 3,000 people all doing the same thing. So if 1,000, 2,000, 3,000 people all buy APDN and the price does not move, what does that suggest? If everybody just comes into the offer, right? If everybody's buying the stock and it does not move, they're going to hold it until the leader, quote unquote, says sell, right? And if it does not budge and they go to sell, what do you think is going to happen to the stock? The bids are going to be gone and it's going to flush out. So that is exactly what I did and what I do when I'm looking for opportunity. I'm looking for this manufactured breakout, a manufactured trade that fails. And when we are given that free look of failure, that's when I want to take part in the opportunity. And as you can see, completely unwound. Now, there was also fundamental reasons, which I've written a blog post about on this particular name. There's also, there's multiple reasons as to why I was so patient as I was on this trade. But the technical reason and the main reason for my entry, based off the newsletter getting long, getting that free look, the stuff move that we talk about on Tandem Trader and textbook trading, and then everybody looking to get out because the stock did not break out. That's your advantage, that's your edge, and that was the trade. Another recent example is on NAT. Now, NAT just started taking off one day after hours. Why? What was the reason? A YouTube video came out with 500,000 subscribers suggesting that they had bought the stock and why they felt it could break out. Once again, everybody is just looking to be told what to buy. And so it's good to understand where volume is coming from. It's good to understand where demand is coming from. But once it starts to meet resistance, that creates opportunity. So this was a great example of basically a big breakout after hours, and then reality came in and it started to pull back throughout the after hours session. And now it ended up having a nice breakout on the daily chart, ended up providing a really nice opportunity over the short term. But once again, it's understanding where the volume is coming from, the manufactured move, and what exactly is causing this price to move. And it is all these new traders that have entered the market that just want to be told to buy or sell. Now, the biggest thing to understand here is that all of these traders will make money until they don't make money, and there's a good chance that they won't. It will blow up and they will no longer be trading. Just like Bitcoin. A lot of people made a lot of money and then all of a sudden they just don't talk about it anymore, right? So the reason why we're doing this webinar, the reason why we're having a conversation today is so that you are not one of those people. If you join a service to be told what to buy or sell, then you're setting yourself up for failure. You need to understand the why. You need to understand the thesis behind the particular trade. It's okay to get ideas from people. It's okay to get a thesis, an idea, a concept. But if you can't pull that trigger yourself and you have to be told what to do, you are setting yourself up for failure. You will not succeed. Just to give you another example of what's going on in this current market environment. You can see here, this is about March 8th. Go back to about right here, where this is about January 1st, right? This is about the beginning of the year. 300,000 people own GE stock at Robinhood. Within 3 months, 4 months, there is over 700,000 accounts that own GE. This is what's going on in the market right now. Hundreds and thousands and millions of accounts are being opened, spreading stock out among hundreds of thousands of accounts. Now, this GE example is just to kind of show you just how many new traders are coming into the market. But you can also go back and just take a look at, for example, a recent trade, once again, MVIS. you have a stock that is basically 20 cents up to about 50 cents. It had 10 to 15,000 shareholders to start the week. It now has over 50,000 shareholders. That is insane. And once again, that's what you're up against. So we are in a market of people that press buttons first, ask questions later. And our goal is to help you answer those questions first before you push the buttons and make a mistake like most of these people are currently doing. Another recent example is UAVS. And if we look at the stats here, you'll see that once again, you went from 10,000 shareholders to nearly 40,000 shareholders within a day. That is a huge change. So, what does that mean? That means that there's a lot of people that have no idea what they're doing that just lost a ton of money. So we have a stock that was just 90 cents, runs up to 130s, runs up to 250s, consolidates. They have a conference call on this day at 11 a.m. Everybody is super, super excited. Everybody on StockTwits and Twitter and all the message boards are all excited because they're going to announce this huge partner. And all they do is disappoint on the conference call. And so we go from $5 to $1.20. Once again, 40,000 shareholders that have no idea what they're doing, pushing buttons first, asking questions later. So once again, our goal here is to open your eyes before you lose all your money, before you make bad decisions, and before you end up like one of them. I said I would talk about looking left a little bit. Now, this SAEX example is on an intraday chart. So looking left, you can see the morning ramp ends up pulling back and I ended up covering here. Now, the next trade that I took, I looked left because we have this information from earlier. So whereas this was a reactive trade and probably not a good trade for a lot of newer traders, this was. And the reason for that is because out of open, I want to assume that it wants to go back up to these prior levels. And therefore, any position that I take, I want to make sure that I'm comfortable with it testing over and under that level. And at which point, if we get that ramp out of the gate, I want to reactively trade into that push, scale into the winner if I'm right, and trade around that core. And that's exactly what I did on this trade. Once again, this yellow line is VWAP, like I was telling you guys about, which you should 100% add to your charts on a daily basis. Now, I'm going to quickly go through just a couple other names and types of trades that I like to take. These are all things that we go over in our educational material. We do, daily video recaps. We do daily Q&A. We do a broadcast in the morning. We call the morning call. Basically, I take the microphone at around 8:50 a.m. to about 9 a.m. and go through what I'm looking to do off the open. For example, NAT, which is a trade that we were talking about just a moment ago, was a very overextended move. And it was a move that I'm very familiar with. It was a move that had gone straight up without any correction. And therefore, the goal is a gap up, some type of parabolic move to get short, scale into a winner, and let the trade unwind. And the reason why I'm looking for a trade to unwind in a situation like that is because there has been zero correction. When trades go straight up without coming back and testing key levels, when and if it does pull back, it's going to be hard and aggressive. It's normal and it's healthy for stocks to pull back. And when they don't and they start to overextend, it's typically an outlier move, and it's because many times it's a squeeze, a short squeeze of sorts. And so as soon as that cover is done, that's when you start to get that fast pullback. So we had a setup on NAT and we had a setup on BBY where it was straight up, same day, same trade. I just want to show you guys those. That's what I would call gap up, parabolic, and then failed follow through momentum. Now, this trade, once again, just like SAEX, the last example I just gave, the first trade may not be good for a new trader. However, we just talked about VWAP and how it's helpful to you. I like, after this parabolic happens, flushes out, when it retests back into this VWAP level, I love that trade versus prior resistance levels. And you can see right over here, it kind of peaks out multiple times at that same level. That's a good starting point for your risk. Then start to use VWAP as your guide. You can see the same thing here on BBBY. Same trade, reactive trade. Again, first trade may not be great for the new trader. However, you've got a plentiful, if you wait for VWAP, lower risk trade, set risk, and let the trade unwind. And then let it come back, retest the VWAP level. Use this as a guide for resistance upon reshorting, as you can see here, and look to capture the downside move. So that's another great example of a trade that I like in this current market environment. You can see here, using VWAP again, coming down, and I'm just joining a trend. I'm not trying to find the top. mRNA has been a very, very tough trade for a lot of traders because everybody doesn't want to miss the backside. But you get so pre-exhausted on the front side of the move, you end up missing it. So this is another great example of letting the trade do the work versus you. And one more example of that, BYND, same situation. You can see that, I didn't trade this parabolic move off the open, but let it come under, let it retest versus VWAP level, and now you've got a nice risk level that you can use as your risk to join the trend on the downside. So again, that's just a short example of either a gap up parabolic trade or failed follow through momentum, which we cover at Investors Underground. We talk about it every single day. It is my most favorite trade in this current market environment. So again, I think one of the most important pieces to understand in this current market environment, since there are so many new traders coming through the channels, being interested in trading, asking us questions about trading, I think the biggest thing to understand is that it's not easy. And if anybody even remotely suggests that it's easy, you should run. There is no turning, $100 into $1 million. There is no how to become a profitable trader in 30 days. This is all just clickbait to try to capture you, to get you into, a particular service. We have a major free YouTube series to kind of give you that foundation and understanding that you need to understand what you need to know in order to even start to walk in the market. Most traders that come in and see these types of advertisements and, Lamborghinis and all that kind of stuff tend to run first, right? You don't want to run first because you're going to be out of money quickly. So just a couple questions to end this segment of the webinar. What style of trading is working best? Right now for me, it's overextended charts. It's parabolic, reactive trades off the open on overextended charts. So that, for example, is something like NAT, BBBY, something that's gone straight up for multiple days with heavy volume that is yet to correct. And also failed follow through momentum. Now that is not trying to find the top, letting others do it, and waiting for it to have lower highs, fail, and note where it always tends to hold. And whatever that support level is, once it cracks, that does not mean that it's a short. Once it cracks, I want to see it snap, come back and retest, fail, come back and retest, fail, and start to form lower highs. And at which point, I would then be interested in fading the trade. And that example you saw on mRNA as well as BYND. Right now, what I think is working is themes in sector trades. Now, like I said, that could be particular things such as cruise lines, airlines, oil, and it also could be themes such as mask plays, such as food delivery plays, or it could be a particular price level where 20 to 30 to 50 cent stocks could be hot this week. Next week, low floaters could be hot. Or next week, reverse splits could be hot. It's really understanding what people are looking for. People tend to jump on what's working. So as that theme heats up, just understand where you're at within that theme as well, right? If everybody's doing the same thing, everybody's making a lot of money. And when everybody's making a lot of money, it's not going to last very long. So you really want to pay attention to where you are at in those particular cycles of either the themes or the sectors. What to look out for? You want to look out for traps such as situations where something should have broken out or broken down depending on what side of the trade you're on, right? So a lot of times if I am short something and I was expecting it to crack, I was expecting it to break down and it doesn't, I take note. I take note of that. A lot of times you'll see me say that should have died there or it should have died by now. And if that doesn't raise a red flag for you, then I don't know what will. But if it doesn't do what you're thinking, either size down or get out. You can always get back in. Same thing on the long side. Okay, it's about to break out. Looks great. All right, here we go. It should have broke out there. Okay, well, everybody else is doing the same thing as you. Everybody else is looking for that same breakout. So as soon as they realize that it's not going to break out, as soon as they realize that it probably isn't going to happen, where do you think they're going to go? Just like the APDN example, they're going to go to the bid side. They're looking to get out. You need to be safe and out first. Now, whether that means you just size down or get out all the way, the most powerful thing that I think you can take away from this is that you can always get right back in. Now, one of the things that I forgot to mention earlier is with the discussion about how many accounts are being opened. I think that this is related to two reasons. The first being free commissions. In the last quarter of 19, everybody went to free commissions. So that's the talk of the town. Everybody's like, oh, where you trade? Oh, it's free now. Can't wait. This is great. I'm going to save so much money a year. I can trade like crazy now. And many times before, that held traders back from making particular trades because they didn't want to pay the commission. Oh yeah, I would buy and sell. I'd get in and out, but it just cost too much money. Now, it doesn't cost anything. So people are just flipping in and out all day long, creating massive volume like we've never seen before. And then the second thing is the entire coronavirus, where everybody is either now laid off or working from home and they can do whatever they want because their boss is not looking over their shoulder. So that creates a lot of volume and opportunity and active traders in the marketplace that were not there before. So now you've got all these people that just collected money from the government. You've got all these people that are trying to basically offset their income because now they've got nothing coming in. And so they see all these people that are making all this money online. They see YouTube videos that say they can become a profitable trader in 30 days. They see this guy turning, $100 into $1 million, and they think it's that easy because they're falling for the low-hanging fruit that these services are putting out there. That's their goal. And you're going to come in, you're going to lose all your money, and you're going to be done. So again, the goal here is to open your eyes to the education and understanding of what is important as a trader as you're entering into this industry. Now, in closing, this is a career-making market. I personally have never traded as well as I am right now, knock on wood. I have never been firing on all cylinders as I have in the last 4 or 5 months. There are career trades every single day. One thing that I talked about last Sunday's scan, for those of you guys that do not know about that, every single Sunday I put out a video of my watch list, kind of go over a little bit of psychology first, what's working, what's not, what are the themes, and then I go into what I'm going to be looking at for the week. But one of the comments that I went over was that somebody is always going to make more, right? So I could have the biggest day of my career. And then I talked to a couple friends who are great traders, and they made double what I made, right? So if you're always comparing, you're never going to be happy. So you as a trader always need to kind of focus on being a better you than the day before, right? And I've talked to a lot of traders that are making money hand over fist, doing a great job, but they're leaving a ton on the table. And that's okay. I'd rather be complaining about how much I left on the table than complaining that there's no trades, right? So just take that into consideration as you progress as a trader. Don't ever try to play catch up. If you ever try to play catch up to other traders, believe me, it never ends well, and it always goes the opposite way. So right now, it's trading career type opportunities. If you take this seriously, if you take this time and actually learn how to trade and educate yourself properly, this is the type of market where you can stack capital, you can stack cash, and if you do, that can set you up for a very long time and give you the best possible chance to become a profitable trader. And I'm not just talking about, coming along and making a bunch of money in 1 month and, deciding to go full time, right? I'm not talking about that. I'm talking about getting some really good trades, stacking that capital, building that account, and giving yourself the best possible chance to actually learn a proper strategy, learn what setups have the highest probability, what setups jive with your personality the best to set yourself up for the future, to give yourself the best chance in this industry. So I do hope to get to meet many of you guys one-on-one in the chat room. We have a Momentum chat room, which is where all the news, alerts, action, trade ideas, whatever you want to call it, happen. We have the Traders Lounge, which is where all the mentoring, one-on-one Q&A happens during the day. We have a pre-market broadcast, which we call the morning call, where I take the mic every single morning for about 5 or 10 minutes and basically take my watch list of 20 names and condense it into 2 or 3 main watches. And quite simply, we have some of the best, if not the best, veteran traders in the market today, all in one spot. And that's right in the chat room. So if you take nothing else from this webinar today, I want you guys to understand, just put the brakes on a little bit, educate yourself before you wish you had educated yourself. Take it slow, ask questions before. Don't push buttons first and ask questions later. And I hope to see you guys in the Investors Underground chat room. Back to you, Cam.
Thanks, bro. Some pretty good insights as to what's going on in the market right now and what kind of opportunities there really are out there for not only aspiring traders, but opportunities to take things to the next level for intermediate or advanced traders. So like Nate said, we want to see all of you guys in the Investors Underground community. We've been running this community for over 10 years, and it feels like the last decade has just been the training grounds or the practice for what is going on right now. Everything we've learned pretty much up until the beginning of 2020, all the strategies and different market conditions that we've traded through, all of the tools and functionality we built out for the Investors Underground community and its members, all of our experience and expertise, it feels like we built it all for this very moment. There's never been a time in trading history that's been like this. And whether you're a newer trader to the market or an experienced trader, now is your time to shine. I put together some custom deals so that people can come on board with IU based on their budget and level of commitment. We're really looking for the very most committed traders. You don't need to be the best, but you do need to care about learning and improving yourself on a daily basis. The URL is up on the screen right now. You can go to it, and there are some deals on memberships and bundles so that you guys can come on board with the Investors Underground community at a discounted rate. We've set a limited number of allocations on these spots just because we obviously spend a lot of energy when people come on board with IU to bring them through the onboarding process and get them up to speed. We can't go and do it for hundreds of people at once, so I've limited this number as to what we believe the team is going to be able to handle to make sure that all the members are going in the right direction and making the right moves. All right, that's just about a wrap for today. It was a pretty fun webinar. If you learned something in this, I would say that, all of the free things that we do, whether it's the YouTube channel, whether it's these webinars or, the Sunday scans, that's probably like 5% of the value that we deliver to our Investors Underground community and its members. If you've learned a lot from that 5%, I'm sure you're going to learn a lot more from the 95%. Take advantage of one of the spots if there are still allocations left and come and see what we can do for your trading.